in our practice, sometimes creative lending becomes necessary. And Frank has been in the mortgage business. He's going to talk about some of the products and services that he provides that assist in our client work, helping to solve liquidity issues and other mortgage solutions. Frank.
Thank you, Lou. Good morning, everybody. So we're the sponsor that paid for the food. So. As the panel has mentioned, throughout this morning, interest rates have doubled. It affects us all. We know that it affects everything that we do. I first started in the financial services industry as a wealth manager. I was a financial advisor for 10 years. And then about 20 years ago, I transferred over to a bank, and I've been doing retail mortgages ever since. I work with wealth managers, accountants, attorneys, and realtors. And it's cash flow management. I mean, we all know how, mortgages are pretty basic. I mean, I'm going to get into some specifics. But cash flow management, when I deal with the wealth managers and the accounts, I'm on the debt side of the ledger. It's really just looking at the cash flow, looking at how we can manage the cash flow for your clients. What options are available. Obviously, if it's a plain vanilla loan, or if it's a plain vanilla scenario, we do have some of the best rates. But it's usually that out of the box stuff that comes into play, like Lou said. And it's a team approach. I'm sure you all know that based on, the great panel that was put together. I've worked with a lot of wealth managers and accountants and attorneys over the years, and I find the most efficient teams are the ones that have different pieces of that puzzle, or as we sometimes put it, the right people in the right seats on the bus, meaning everyone complements each other and everyone works most efficiently. So if you're not working with anybody in the mortgage industry, get to know somebody. I mean, that's someone local. We'd love to work with you. Like I said, I'm more of the out of the box type of stuff, but we do all types of mortgages. Regarding the case study, I was up at the Albany event, so it was a little bit different. In this case study, what I can say is, they sold the real estate, they sold the commercial building. But in some scenarios, when you have these high net worth individuals with the estate planning, they don't sell the real estate. Sometimes they hold on to the commercial real estate. And we do a lot of commercial real estate. We act as a broker. We're a banker, but we act as a broker on those cases. And we've had some families recently that came to us for some very large commercial financing. And like I say, that's why it's good to work with someone, like I said, that maybe works through the broker channels on the commercial side, because they knew a lot of local banks. The family knew some local bankers that, and just not every bank specializes in every product. Most of you know that, but I see it every day. So we were able to get this family some of the lowest financing and the best terms that they needed, to pay the debt service on the building and also fit into the financial planning model. There's also another aspect to the case study, which is Kim's mom, Joyce, which I think Peter is going to speak a little bit about on the estate planning side. And, just to mention her, because she's, the case studies, it's the Kim's mom. Sometimes the home equity conversion mortgage, which is commonly known as the reverse mortgage, comes into play in some of these scenarios. It's not for every family and it's not for every case, but it's a line of credit. It's not as hard to qualify for, and it just provides cash flow. In a lot of the case studies that I've sit through with Lou's firm, it's all about cash flow. It's maybe divvying up assets, like in this case with a divorce, but it's also looking at to make sure both sides of the family, including the kids, can live a comfortable lifestyle. So sometimes the home equity conversion mortgage works, sometimes it doesn't work. We do a lot of those. And it's also consolidation loans. People I had a wealth manager come to me recently with a family that just had a lot of student loans. They weren't federal student loans, so they weren't, looking into this, if the government was going to, relieve some of those student loans, and they consolidated around $400,000 of student loans. They put two of their kids through law school, and it saved them about $1,500 a month just in cash flow. So most banks can do these loans, but like I said, working with someone that works with wealth managers, so always try to find someone that understands the type of clientele that you all work with. Contour Mortgage is, we've been around since 1993. I moved my team here about a year ago. We were at a federal chartered bank here in New York City for about 9 years. So my team specializes in a lot of the out of the box stuff. What I mean by out of the box stuff is We could, banks historically don't like to lend to irrevocable trusts. It's very hard to find a lender. There are sometimes you'll find a community bank or you'll find a local portfolio bank. But I speak to them all around the country and they want it to be within 5 miles of their headquarters. And interest rates moved up recently. So a lot of these banks pulled back. So my team, which is an underwriter, processor, a couple of assistants, and my partner, Mike, we do a lot with attorneys and wealth managers when it comes to these trusts that you guys are mentioning. Any of the trusts that hold real estate or real property, I can usually figure out a program that can help the family. There's 30-year fixed rate programs. There's some adjustable rate programs. And a lot of families look at, like I said earlier, look into the home equity conversion mortgage, which is the line of credit through the reverse mortgage. Because our team knows how to get them approved with the trust, and it just doesn't have a payment. So sometimes it's like I said, I'll keep going back to this, but it's always cash flow. We're obviously, technology has taken over most of our industries. So, we're a very efficient technology-based bank. We do e-docs, e-sign, everything. We have an application, an app, So any of your borrowers that would work with us, they get an app, they download documents. It's pretty efficient, and it, keeps them abreast of what's going on during the entire process. We also work with life estates. I don't see as many life estates because a lot of the planners and a lot of the professionals here today, including yourselves, we'll look at the trusts. They're a little bit more efficient and maybe accomplish what the family's trying to accomplish. But I still see life estates, that have been around for years. So we do have some lending programs available if you have families that have put properties into life estates. We do a lot with LLCs. Most banks should do LLCs and most banks should offer programs in LLCs, but I just find some of them don't, especially in uncertain times like this we were in today. They just pull back a lot of their loan programs. We have a couple of cases right now, which I'll just go over quickly and give you an idea. I had a wealth manager come to me that he's managing about $4 million in his client's qualified assets. They're all in IRAs. And the family, the husband and wife, were looking at an active memory care community because the husband's starting to show some signs of dementia. So they were just looking at purchasing, a condo in this unit. The wealth manager just didn't want to look, every dollar, you all know, every dollar that comes out of a qualified plan is taxable. Plus the asset manager wanted to keep the assets under management. So we came up with a good strategy. We actually got them what's called a jumbo reverse mortgage, which is for the higher end properties. They'll go up to $6 million in benefit. So we were able to get them most of the money. They were looking at something for about $600,000. So what they were able to do was just take some of the money out of the property because they weren't going to move into it for a few years. They took some of the money out of their existing property. And then I think the wealth manager only had to withdraw about $50,000 or $75,000 from their IRAs. So it saved, it helped the wealth management team and also helped the family. I have a large law firm that I work with in Manhattan, and one of the partners called me, and we helped him buy a condo down in Florida a few years ago, but he was looking at another condo out in East Hampton because he was going to let his son that just graduated from med school live in his house. Everyone thought it was a warrantable condo, not to get too technical, but there are certain parameters that condos face. This happened to be an unwarrantable condo, which just means it was new construction. They were still going through phases. A lot of the local banks, including the larger banks, don't like to touch those. So we do have a lot of these unwarrantable programs. The rates were about maybe 75 basis points higher than conforming rates, for the risk adjustment, but we're able to get them into the condo. Also have another attorney that came to us recently. He was building, a $4 million property out in Montauk. The construction to perm. It was fun. It's not funny, but I know him well, and he said, I know bankers, I know this banker, I know that banker. I'm like, all right, talk to all the bankers. We're always trying to put the client's interest first and the best programs. He came back with a bunch of offers, and then we just, from experience as well as there's a couple of dozen good lenders out there that do these construction perm loans, but you need to know where to go. So we're able to get him some of the lowest rates. He was able to buy the property, knock down the house, and then build a new house. So it's just different types of scenarios. We could do most of the things that I've mentioned this morning with any type of ownership, not all types of ownership, but LLCs, trusts we're very user friendly with. The life estate only has a couple of programs that we can offer. Asset depletion is another program that's out of the box where I was talking to some of the panelists prior. we get a lot of executives or people on Wall Street that, you know, especially in the private equity side, that, you know, have unique ways of earning their income. And maybe, you know, they show 225, you know, on their adjusted gross income, but they're worth, you know, hundreds of millions sometimes. So what asset depletion does, if you don't know about it, just we could take a brokerage account, we can take marketable securities, liquid securities, and we could, you know, use life expectancies, use certain factors that our bank comes up with, and then we can just say that asset base is going to produce an income stream. You know, we're not beneficiaries on the account. They don't have to designate the account anyway different. You guys hold the assets. But we at least we can show an underwriter that they have this large asset base. Part of that is the crypto mortgage that is, it's not becoming popular, but, you know, especially now, with what's gone on in the last couple of weeks. But we had a lot of families, maybe in 21, they were looking to buy second homes out in the Hamptons, or they were looking to buy, another gentleman was trying to buy a condo up in Vail, actually for a ski house. It's really just we take the crypto asset portfolio market value, discount it by 60%. And update it at closing. So if things change rapidly, we look at it again the day before closing, discount it 60%. So we had a gentleman with $5 million in Bitcoin, discounted it to 2 million on life expectancy. For his age, we were able to give him about $23,000 a month of income. Like I said, the crypto stays where it is, but it just gives cash flow, and it gives, and you know, cash flow on not on paper, but from an underwriting perspective. I mean, like I said, we specialize into the out of the box stuff. If you don't have someone on your team that does a lot of the debt side financing, we'd love to have a quick conversation with you. After these events, sometimes my assistant Janice might email you or just reach out to you. If you want us to take you off the list, we understand, but you know, sometimes a quick 15 minutes phone call, you get a good idea of how our team works, who you have as a resource. So when you're sitting down with one of these case studies, or if you're sitting down with a family, you know, use your bankers. I believe in relationships, but if you have something that doesn't fit into the box that some of your local lenders might entertain, give us a call. I'm based in Garden City. Obviously, I travel all over the state. We're up in Albany, we're downstate, we're all over. I'm licensed in 26 states, so most of where our clientele are, we can usually help. And you know, enjoy the rest of the morning, enjoy the rest of this great panel, and I appreciate your time. Thank you very much.